Like always, money was made and lost last week. It's a new week, it's week 23, and this is the StockInvest.us podcast. My name is Jim, and I will guide you through the next 30-35 minutes where I'll talk about the markets. I will tell you how last week's trading tips went, and of course I will give you a few new for this week. And what are the big things to look out for this week? Well, we know for sure that on Friday there will be new consumer price index number. That will tell us something about the inflation, how it's raging, and despite many people in high positions in the United States says that now we are at the peak of inflation, I don't think so. More of this will follow. First, you have to listen to the disclaimer, and just after the disclaimer, I will tell you exactly what I think will happen in the market for the week ahead of us.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Sometimes when I make this podcast, I say the podcast will last 35 minutes, and it lasts maybe 50 minutes. Reason for this is often there is much to tell about the market. But today the drilling is very bad in this building. It's noises and sounds everywhere, and I actually tried more than 20 times to make this podcast so far. So I will for sure shorten the podcast as much as possible. Hopefully all the building, all the construction will soon end, and I will see if I maybe can turn the camera so you can see the beautiful view from the building where I'm sitting. And despite very good weather, the exchange and the markets are not in the best shape. But we know this, and last week the markets came in more or less as expected. Had a good start and fell by the end of the week. And for the trading candidates and for last week's trading tips, which we will get to by the end of this podcast, you will see that most of them were sold by stop loss on Tuesday and Wednesday, simply because markets were good on Monday and Tuesday, and then started to fall. And by the end of the week, Nasdaq and Dow Jones slightly made it to the minus, but it was not very big. It was just under 1% for both of them. Nasdaq ending the week at 12,012 points, just about 12,000. We talked about the importance of this, or down 0.98%. Dow Jones ended down 0.94% and was just under 33,000 points at 32,900. The question is, what will happen this week? I will just have to rewind some podcasts, because usually I tell you a little bit what happened also in the longer future to try to give you an idea. And over the 2-3 last podcasts, I've been telling you I expect good weeks, but that we might come to an end. If you rewind 5-6 podcasts back, I told you that the most common expression for May is runaway. And May, as you know, became a very bad month for the markets, despite not last week, but the week before, markets were up almost 7%. Before that, they were falling 3-4% every single week, 8 weeks in a row. But we are in June, and historically, June is usually not a bad month. So from this perspective, we know it's a fair chance that there might be good markets. But we will look at charts and we will try to conclude. There is a few drivers in the situation that we are right now. I've been mentioning this for, I think, we are heading into 2 years soon, where I told you about the Ukraine conflict, how it will come, how it will become war. Sadly, it became a war. The consequences. I told you about inflation and how inflation is raging and how this will lead to different things. And we know that when interest rates go up, uncertainty in the markets increases. Money try to find where its most solid positions. That is why, for instance, I took a personal bet into gold, because it's one of these things that usually, not maybe always increase, but at least is somewhat stable when the rest is unstable. And to end this a little bit about these long term. So we are in a situation where the markets are in a very negative trend, and you can expect this to continue. 2 weeks ago I told you that I think maybe last week could be the end of that short rebounds, which was very obvious. We should see a rebound up to the middle of the trend, where it either will go up to the top of the trend or it will fall down. And we are exactly there. We are exactly where the markets may very well be okay this week, but they may also fall very hard. So which way will it be? Trying to find that answer for this week. We will look at some fundamental things that you should keep an eye on, and of course look at the charts. I love the charts. The charts tell everything. So what are the main tickets? We heard Yellen, for instance, in the United States, said that, I was sorry, I was wrong about inflation. I wonder how such an important and knowledgeable person could be wrong about it, because it was obvious for everyone else that inflation was going to be, and that it was going to be strong. The question now, will it continue? And before this podcast, I read a lot of news. Just to get a grip of what is happening in the market, prepare a little bit for what to tell you. And many news were actually, now we are at the peak of inflation, because now there is a pressure towards the producers and blah, 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 blah. What everyone seems to forget in this equation is the transport cost. And oil, which I told you would go up and might go as high as 200, is at $119. It's up $3 from last week, and anyone who fills gasoline on their car should already notice that it's getting very expensive. And this is not only for you, this is for all the logistic companies, everyone, the airline companies for sure, everyone transporting the goods. They have insane increase in their transportation cost. Who has to pay this? Will it be the companies? Of course, they will take a little, but they can only take a little part of it. The rest, you and me. And how do we pay by it? Well, there will be increase in prices. So the producers, they may produce as much goods as they manage, and we might see some logistic issues related to Shenzhen in China and harbors and COVID policies and all these things that I mentioned a million times. Container issues, the lack of containers stock in China at the ports, all these things. But the fuel cost is now extreme, and there is nothing saying that it will go down. It will just continue upwards. Everything is pointing that it will just continue upwards as long as the Ukraine war continue, as long as the sanctions are as they are. We can only expect energy to continue upwards, making two things happening: inflation to increase and speed up the unemployment rate. So I don't see why inflation should go down. And this brings me to the very first ticket you should follow on Friday. There will be consumer price index numbers. They're expected to be around 8.3% in the United States, 12 months over 12 months. And I think that because now this is something that really caught the attention of the Biden administration, they will do whatever they can to make the numbers look very good. And I will be surprised if they are very high. I expect them to come in somewhere where they are. and could even be a little bit lower. I don't know for sure, but I don't see the index, the inflation number coming in very high right now. If they do that, will take the market very, very hard. But I'm also pretty sure that anyone with a certain amount of knowledge, these big funds, these big banks, all of them expect the same like me, that these numbers, they are made a little bit nicer than they actually are, and that they will just continue to increase slowly in a bad way. So Friday, keep an eye on consumer price index numbers. These are the main numbers for the week, and everyone will keep attention to the week. And one of the things that I think is that it may cause actually the week to be somewhat slow. There will on Thursday be job numbers. Don't expect something very special, but as I predicted, you will now see job numbers starting to weak. And the reason is simple, that when you pay as much as you do for your gasoline, you start saving costs anywhere else. So where will you save? Will it be clothing? I told you a little bit about clothing last week. You may not buy as much clothes as you usually do. Of course, and you may not go to restaurants as often as you do, and all these things means that there will be reduced activity, and reduced activity means that they have to start lay off people. And you heard all this from me very first. Just listen to my podcast, put them on your favorite list, make sure to subscribe if you are listening to this podcast on YouTube. You heard me say this over and over. And if you watched the news last week, even Elon Musk said that now he will start to cut employee numbers in Tesla. So it's not only me, now also one of the most important persons in the world are saying the exact same thing. All of this will put a toll on the markets as we move forward. But enough about these background things. So fundamentally, watch out for Thursday's job number and Friday's consumer price index number. Looking at the other things that we like to follow, well, oil is continuing up. As I said, it's $119 per barrel, up $3 from last week, or 2.52%. Gold is, and just a side note there, fun fact, last week Norway, which is a very great oil producer, had the highest gasoline price at the pump which we ever had in Norway. So even a rich country, oil producing country like Norway, really see gasoline prices at extreme levels. I will not explain exactly why, but it has to do how petrol is made. It's not directly from the oil well, it has to be refined first. Anyway, gold is down $9 at 1,857. It was a little bit lower, but then rising up. Personally, I'm considering to get even more gold, as I now start to see even more worrying signs for the future, and that the recession, which I think is inevitable, that will come for the markets. The 10-year treasury yield, which I also said was way too low last week, rised up 0.22 to 2.96, up 7.4% last week, and I think that 10-year treasury yield will come just rising. And most of you maybe not read as much news as you should. You may not have time to follow the markets as closely as you should, and many may not understand all the ways that things connect. That's one of the things that I try to make easy by explaining a lot in these podcasts. And there is the 10-year treasury yield. It's one item which you actually can invest in. There is a lot of items in the markets that you can bet on in a negative markets. If you believe, like I do, that the interest rate has to go up, this is the only way to fight inflation, you can buy bond yields, and there are instruments to buy it. This is my prediction what will happen. Now you can hear they say, oh, we will not increase as fast as we thought. We will go for a soft landing. But my bet, and I even see they are talking about this in EU right now, the rates, they will go up much faster than you think. It will start. My guess is somewhere around July. And suddenly they will just have to go very aggressively, up 0.75% once, 14 days, 15 days, 3-4 weeks later, it will be another 0.5%, and they will just have to do that like that. And I think we will see a huge increase in rates as inflation might even run somewhat wild. Where do I have all this from? Well, there is a lot of news you can read, and you can try to check out the inflation in Lithuania, where I am sitting, how badly that has become. And you have to fight it some way or the other, and usually it's by interest rates. And last mention of that, interest rates up, markets usually down. We will look at the chart. We have to try to find where will the markets go this week. What will it be? Will it be green week? Will it be a red week? So from the fundamental, you heard me say that there are some news, there are some major things. The overall thing which I try to convey to you is that there is no really positive things in the markets. So from a fundamental point of view, we are heading for that, I would say, either slow or negative week. I told you that the last 2 weeks upturn, especially not last week but the week before, was a supernatural upturn that had to come because markets were way oversold. And for those who are listening on the radio, whether it's Apple or Anchor or wherever you are, this podcast is also available on YouTube. And if you watch YouTube right now, you will see the chart because I pulled up the nasdaq chart. And quick technical analysis, you can see the trend. The trend is very negative. The index is moving in the trend, as you can expect. There is sell signals from the long-term moving average. That's a very dark blue line. And there is a soon-to-be sell signal also from the short-term moving average. The short-term moving average became a buy signal 2 weeks ago. And we can tell that the volume is not following the market as good as it should. We are in the middle of the trend. That's the most important thing that we can take out of this thing. And here comes the deal. You can see the relative strength index is 53. It was topping out around 64. It was not overbought like it was back here. You can watch it April when it was really overbought. Now it's not very overbought at all. Actually, it's not overbought. It's not even high, I would say. So from this point, it's a fair chance that things might still go upwards. But the most common thing now is that market should fall down and try the support between 11,500, 11,700, maybe even below 11,500. What we want, what we need is the markets to stay above 11,260, which is previous low, because then we can start to establish a possible upwards trend. So we need markets to stay above this previous level. Again, watch the YouTube video and you can see where I'm pointing. We need the next bottom to stay here and markets go up so it can test the top of the trend. After years looking at charts, playing the markets, I would usually say that what we can expect is that the first few days, today, Monday, and then maybe even Tuesday, to be slow, maybe even red. And maybe the last part of the week will be somewhat okay. And that the markets will be close to where they are today. So go down a little bit up and be close to where they are today. So from a technical point of view, I would say there is a higher chance that we are heading for a new downturn than upturn. Best case scenario is that we end somewhere between 12,000 and 12,500 for the market, that we still remain about 12,000. That's the best case scenario. The real scare is if we fall below 11,200, because then it will go very, very fast down to 10,000 for nasdaq. I don't see that as a huge probability this week, but it may happen. But before it happens, it should start to bounce a little bit around 11,500, giving you time to get out of position. Talking way too long again on this subject. The conclusion for this week: there is no obvious signs that we should go up. While there is a fair chance that we should go down, the risk reward is not super attractive. And I forgot to mention the buy and the sell signals, so I will run through that very quickly. At StockInvest.us, we analyze more than 30,000 tickers in total. Based on this, we give buy and sell evaluations, and as I told you, the amount of sell signals across all these tickers were going up, a very good sign. Last week it even went up a little bit more, from 22 to 24 across all tickers. A good sign in general. It is getting too close to a place where we can start to see things turn. Nasdaq fell a little bit from 23 to 21. Even New York Stock Exchange fell a little bit from 31 to 27. Very natural, I would say. London from 20 to 12, that's quite much, but here is an interesting find. Tokyo went up from 30 to 39, and China went up from 24 to 35, meaning that these markets are getting very hot. If to guess, I would say that the Asian markets for sure are heading in for a bad week, and this may put a pull on the European markets as well. Red or green week, I wish I could say it will just be a yellow week, that we will be somewhere where we are today. I think that's the most likely scenario. So hard to say. I will stick with the idea that I had 2 weeks ago, that we would have this short upturn to the middle of the trend and continue down. So my gut feeling says that the end of the week might actually be red. We will see. Now I will quickly run through some of the major companies, and we will head into the trading candidates, and you will hear that I made quite good trading in both Apple, Tesla, and a few other. You'll also hear how Micron did last week, because I had to take a small loss. How much? Just stay tuned. We will run very quickly through the tech analysis: Apple, Microsoft, Tesla, Bitcoin, and DogeCoin. And I will just start to say that last week I was off. My prediction for the companies were a little bit better than they actually ended up. For instance, I thought Apple could, on a good week, end at 155. It was actually down more than $10 below that target at 145. I was off by $7 in Microsoft, because I thought Microsoft might end at 277, ending at 270. And Tesla was even worse. Bitcoin not so far off, and DogeCoin was a little bit off. So how do the charts look today? What are the predictions for these 5 items? We will start with Apple, and we will make it very quick. The good exercise about this is that, because look at these charts, you'll get an idea about the market as well, and a lot of people have and still are invested in these major companies. And again, a small side note: I will at some point start to get in to these major companies. Simply the following logic. I believe, and you heard me say that I reduced my market exposure over the last year because I expected this downturn. I don't know exactly where the bottom is. I don't know how long it will be. Will it just be half a year? Will it be 5 years of pain in the markets? I cannot tell for sure yet. It's a lot about the fundamental things, and sadly, as world is run today with all this aggression, you see now Japan is also building up their army. Things might just get even worse from here, and especially if a recession hits, because we always see shit happen when the recession comes. People start lose their jobs and they go for very easy political solutions. Seldom a good mix, so this can be a long one. Hopefully it will be a short one, but anyway, at some point these major tech companies like Apple, they will become reasonable price, because there is no doubt in my mind that for instance Apple and Microsoft are here to stay for decades more. They are not going to fade, and the same thing will be with some more. But back to the analysis, Apple is in a falling trend, looks exactly like the nasdaq chart, not so hard to tell the reason why. Everything is the same, sell signals from the long-term moving average. Apple has made a sell signal also for the short-term moving average, after having a buy signal 2 weeks ago. Relative strength index is 48, it's neither overbought, neither oversold, but it's heading downwards. Things is just the same. There is some support below at 143, later at 138. The most important thing is to stay above 137, because if 137 is broken, well, you can just say goodbye to at least 5% more, because the next fall from that will be very fast to a minimum 125, 127, 125. That fall will be very fast. Everything in the chart indicate that we should continue downwards. Usually I give a prediction for the week. Where will it end? I was off last week, as I told you, by $10, quite much. Didn't move like I think. I think that the very low this week for Apple will be 137, the very high will be 155, and my gut says that it will end somewhere around 145, so 145 will be this week's target for Apple. Hopefully I am very wrong and we will see market pick up at the support just under today's prices and then move up. Now let's go to Microsoft, and looking at Microsoft we see more or less the exact same. It will be a repetition of what I said. Sell signal, short-term moving average, long-term moving average. One thing I like about Microsoft is that volume to some degree followed the volume last week. Problem with Microsoft is the extreme resistance above, meaning that any upturn should be very slow, while it's scattered and spread support below. You can see this on YouTube. Again, I recommend you go to our YouTube channel, StockInvest.us, find my podcast. You will find all my podcasts there. And look at the podcast, because then you will see the chart, or do it to yourself. Go to our webpage, type in Microsoft or MSFT, look at the chart yourself. You will see some gray bars on the right hand side. These are accumulated. The volume is just how many people bought and sold at these different levels. Act as support and resistance levels, together with moving averages and a few other things. And you will see that above there is a very high density in these gray bars, but below is not as dense. And that just means that the risk reward is not optimal, I would say. Hard to move up, easy to move down is the short conclusion for that one. We see Microsoft at 270, just at some support. Of course, it can turn here and try to push upwards. Or it can fall to the next one, which will be at 268, later at 260. I forgot to mention there is another interesting thing happening. The shorter moving average is slowly paving its way to the long-term moving average. If this happens, that the short-term moving average managed to go above, let's say that the stock fall today or tomorrow, then move up during next week, we might end in a situation where the long-term signal between the relation between the short and the long-term moving average actually get back to a buy signal. A little bit early to conclude that will happen because there has to be a good week ahead of us. Last time we had a sell signal, a sell star from this. You can see it's a sell cross. It's the actual name of it. We call it as a star, but it's a sell cross. And you can see then back April 12th, there was a huge sell signal given in Microsoft. Now, if these two crosses, that the short term, that light blue line go above the hard blue line, you will get a general buy signal, which is a good thing. First, it has to happen, and we have to again to see Microsoft stay above 253. Hope that especially that support around $260 will hold. So that will be the asset test for the week. Make sure that Microsoft hold about 260. It might be that we are in for a short-term possible profit in Microsoft. If the support holds, we will have a bottom higher than the previous bottom. We might even get a longer term buy signals from the short-term moving average. That could be anything actually from I would say 3 weeks to 6 weeks buy signals. So be prepared. There might be some options. We just have to follow the charts. Moving to Tesla, which we've been trading 3 weeks or 4 weeks for a row. We've been trading Tesla. Ending the week at $703 after a fall on Friday. It's more or less the same story like we saw in Microsoft and Apple. You need Tesla to stay above 650 because if it stay above 650, it can just continue upwards. I would even say that any level around 650 is probably most likely a good buying opportunity. Lot of resistance above. It will be a long journey resistance at 750, 800, 850 to 900, and 950 then 1000. So any upturn should be somewhat slow. Sell signals from both the long and the short term moving average, and it will be an exciting week. It continues to be what I would consider to be low on the relative strength index. Has to go back 2 months back in time, April 3rd, 4th, when the relative strength index was overbought, and I sold my shares as Tesla went to 1145, got overbought, and has been falling since. Prediction for a week, let's say that it will have a grumpy start, probably struggle a little bit, so I expect Tesla to come in somewhere where it is today. And you will very soon, in just a few minutes, you will hear that my Tesla position was cut with stop loss, using trailing stop loss, but at a very nice profit, just as I told you. Prediction for the week, 750 for Tesla. And let's wrap up this quick analysis with Bitcoin and DogeCoin before you will have my trading tips for the week. Bitcoin been in a very falling trend. What I really like, and I try to convey also this over the last 2 podcasts, is moving very sideways with very little resistance above. Things can go very fast upwards, and I have a personal gamble on that. I told you last week, I think it's a fair chance that Bitcoin will go to minimum 37,000. I'm in for the play. Are you? Up to you. Bitcoin, DogeCoin, crypto, high risk as usual, because if it breaks below 2850 or something like that, 28,500, Bitcoin can just fall straight to 20,000. There is no free meal. This is the gamble, and the gamble may go the wrong way. But I see a possible good trade in Bitcoin right now. Very little resistance above, sell signals from both the short and the long-term moving average, support at just under today's level, and what I want you to focus on is that sideways movement. It's called a rectangle formation when the stock move like that, and for Bitcoin's case it's been moving between 28 and 32 in a sideways position all the way since early May. It will break either up or down, and you just have to take a qualified guess what will be. My guess is it will be up, and I will not be surprised if this is the week that Bitcoin has a comeback to 35 or 37,000. Target will be 34,000 for Bitcoin. And while talking about crypto, let's take the shitcoin. DogeCoin, which we follow, represent these altcoins, all these other coins. And it's the same thing there. It's moving sideways. I personally think it's a good bet. It's one of these things that, okay, you can play the lottery or you can take a small ticket in one of these. Because what you will see, this goes for the stock market and this goes for the crypto. If we managed to flip that negative sentiment, which is now the positive sentiment, the upturn will be way too fast. You will not be able to get in on the very good prices, because DogeCoin, Bitcoin may very well surge 20% on a single day given the positions. This is the same thing in the stocks when things are as sold as they are now. When there is a lightning, an upturn, things will go way too fast. You will just jump in when it's starting to get ready to go down. There is this expression, LOLA or FOFA. Either you are last, LELO, last in, last out, or you are the opposite, FIFO. First in, first out. So who are you? Are you the first or the last of these two? Sometimes it's good to be somewhere in between, because you can be too eager, like too fast in. The market right now is such that you should not invest too much. You should be somewhat restrained and not put all your money in, but we are at places where good gains can be made, and they will get even better, because at some point markets and also crypto will find their bottom. So what is the target for DogeCoin this week? Well, I believe DogeCoin should at least head up to 10-11 cents. I promised myself I would not invest more into DogeCoin, because I bought at 20, as you know. I did first trade 20 to 40, then I sold, bought back at 20 just to see it fall down to 8. So all that previous profit is more or less gone. I am at break even. If it goes up now, I will be back in profit again. I promised myself I will not double down, meaning that I would buy more to get my averaging down as it's called. But I have to say, I am a little tempted to get just a small amount extra in Bitcoin. I bought back now when it fell to 30, but I'm starting to think that I maybe should pick up some of these Doge coins as well. We will see. I will not decide in this podcast for sure, but I am at that place where I like to consider it. Now, we only have a few minutes left, and these few minutes we will spend on the trading tips, last week's trading tips, and of course this week's trading tips. So we're at the final part and the 5 last minutes. So what happened last week? Well, quick recap. In week 21, I opened position in Tesla, Apple, and Medica. During the week, they were not cut by stop loss, so they were actually also active last week, as I told you. And I told you that no matter what will happen in Tesla, I would go for a very good profit. Tesla was up 18% in my portfolio, and as I told you, I had a stop loss, trailing stop loss. So no matter what, I would have minimum 10% profit in Tesla. Last week, I was busy all week doing charity work and long days with hammering and making new floors for a kids' day center. These things were running their own show, just running with trailing stop loss. And Tesla went up on Tuesday. I'm think it was maybe very close to 800, I think I saw, and then turned down. My stop loss just followed upwards, trailing stop loss, that is what trailing stop loss were. And when it started to fall, I think it was either the same day or Wednesday, it was closed at $739. I did not manage to get that top, but as I told you week after week, sometimes I'm way too busy. And last week, my priorities was to help those who have less than the rest of us. But still, I made profit because I bought Tesla at 642, it was sold at 739, leaving a hefty profit of 15.5%. Good. Apple bought 138.50. I put the 5% trailing stop loss. I told you when I bought Apple, just go some podcasts back, that I felt I could make minimum 5% in Apple. Apple did very good, did the same thing like Tesla. It went up, continued up on Monday and Tuesday, I think. Then hit the high. I had trailing stop loss. I could have made 9% in Apple, but it was cut at 144.53, so I made 4.35%. Very happy about this. So these two stocks, which was bought in week 21, it was positions that were open, were finally sold last week. And the other one that was open last week, and as I also said, was a trading tip for the week, America, bought in week 21 at 22.30 cents, 0.2230. Had a nice run up to 26 cents, fell down. I had a very huge stop loss on it, 25% to be exact. And because I think this one will just continue upwards, so it's still active in my portfolio, and it's currently up 8%. And you may ask, what about Zomedica? Should you sell it? Should you buy it if you have it? This, as I told you, is a penny stock, high risk stocks. Of course, take the profit now. If you want. I think it will continue further up. I will not be surprised. I thought it might hit 30 cents by Friday, but I was wrong about that. It only hit 26 cents. I think it will continue up. So Zomedica remains a trading tips. If you don't have it, I think there is money to be made in Zomedica at current level, even for this week. So Zomedica is one of the trading tips for this week. All these stocks which I mentioned were bought in week 21, but Tesla and Apple was sold. Zomedica is still open in my trading. Last week, I came up with two new trading candidates. It was Micron and Robinhood. I thought there was money to be made. I did the same thing. I was able to get them quite low. I got Micron at 72.50 and Robinhood at 10.15 on Monday. I put on a trailing stop loss of 5% of these, packed my bags, my hammers, my saws and everything, and went out some 40 kilometers from Vilnius to a small village outside Nemenchina, together with some colleagues and friends to do some good charity work. So they were bought. They started off somewhat good. Went up 4%, then started to fall. And Micron, my position in Micron was cut at 71.62. It was up at 75.76 or something like that. Then it started to fall. That was the place where my stop loss, trailing stop loss was registered, and I had to take a loss of 1.21% in Micron. Same thing happened in Robinhood, bought at 10.15, went up, and then started to fall down and was cut at 10.03. I think it was 10, some 50 or 60. I saw Robinhood was good. So if you were very active day trading, following the stock close, you could have made much more than me, but I didn't have time for it. I just did as I said. Buy it, put a trailing stop loss on it, and had to take a loss, 1.18% loss in Robinhood. You'll get two trading tips for this week. Very first, that ultimate trading tips, the best I can give trading tips that I can give to you is use trailing stop loss. reduce your losses. You just heard me say that I got 15% in Tesla, I got 4.35 in Apple, I'm up already 7% in America. I had to take loss into, you cannot win them all. You have to reduce your losses as much as possible. And losing 1.2% in Micron and losing 1.18% in Robinhood is totally fine with me. It was a gamble. It didn't pay out. Market started good, then fell by the end of the week. Same thing may happen this week. I don't know. I have a little bit more time this week to follow the stocks more closely. But these things really work. Here are the training tips for this week. I think there is money to be made in Xpeng. So Xpeng, electric vehicle, car making, we saw NIO did quite good. We see Tesla struggle a little bit, has to do with the evaluation of this company. We know that green technology is here to stay. We know that electrical vehicles are here to stay. We know that the governments will put even more money into green. Xpeng had a lot of beating together with NIO and all the others, but I think there is money to be made in Xpeng. I like what I see in the chart. I will hunt for Xpeng. I will try to get it as low as I can today. Buy it, I will maybe not have 5% stop loss on Xpeng yet. I will have to check the daily movements, ATR, volatility to see how much, so it doesn't get cut too short. Cannot promise I will put 5%. I just have to look at it after this podcast. I will try to study, try to get a feeling where should my stop percent be for Xpeng. The other one, Cutera, CUTR, will be trying to buy it as cheap as possible today. I see some potential upside. It's healthcare on the other side of the scale. So we have one car maker and we have healthcare, and I think these two might do good. Overall, I think it will be a little struggle this week, so I'll not give you more. There are 3 open trading tips: America, XPEV, and Cutter. And if it's hard to hear what I say, maybe I will remember to write in the description, but for sure in the YouTube video you will find them. We are there. It became a few minutes longer than expected. Again, easy to talk when you first get started. I hope, I really hope that you are making some money, or for sure cutting your losses. I will be back in just a week, and until then I hope that you will have an exciting, good, nice week, and hopefully there will be some green in your portfolio. Bye.